please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Today could be the day when we are breaking out of that 10,700, 10,850 range. Are we? Will we? That's the question we are asking. The SGX Nifty is indicating a start at 10,898. Not the best of bellwethers, but still that's what it's indicating. With that backdrop, let's invite our guests. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar join us. Good morning, gentlemen. Well, Ashwani, if it seminally breaks and the Nifty stays closer to that 10,890 mark, we would have broken the range?
Well, good morning. If you see yesterday, the way it played out, the gap up took you to 10,830, 835. And in the rest of the day, you probably made 20 points. So I think that should be the character of the market, that every day you gap up 30, 40 points and then you go flat on the day. And, doing that, you will probably get past this 10,900, etc. But I would think more opportunity would be available now for people who are carrying positions than for intraday traders, because intraday traders flourish when there are swings on both sides. So I would think, like yesterday, you gap up and then you go flat. But obviously, we are participating in this global move, and maybe another couple of 100 points could happen.
Okay, another couple of 100 points. It's a big global move. Sudarshan Sukhani and Mitesh Thakkar are also here with us. Sudarshan, good morning. And first, I must congratulate you, because you had told us yesterday that, one should go long in this market. It's looking good, at least for the very near term. And that's what has pretty much played out. But do you think there's more to go in this rally?
Yeah, thanks. I'm very pleased. And I hope viewers are also pleased. Absolutely. This rally is just starting. Don't confuse intraday dips with a bear market. Obviously, there will be dips during the day. There will be buying opportunities. We broke out yesterday. We are confirming that breakout today, aren't we, Lata? We are going above 10,850. World markets are cheerful. I am looking at a target of 11,100 or even 11,200, making lifetime new. That, of course, is difficult to say, but be long. If you are still not long, then wait for those inevitable intraday dips and be on the long side. Don't sell this market. So just stay long.
Your positions are obviously meant for several days at a time, right, Sudarshan?
Yes, Lata. And as Ashwani told you, I don't know. I don't even talk about intraday usually. And this is a market that will reward people who take overnight risk. Okay,
but Ashwani, if as you say, you gap up and open and then meander and don't give you a chance to enter thereafter. How is this market to be played at all at a Nifty level or at a Nifty bank level today?
See, A, you can carry positions. B, at some point, something intraday will happen. But the problem with intraday is that if you get stuck at the top of intraday, then, you get a 30-point dip and your stops get hit. So the risk reward is not favorable. Buying after a 40-point gap up, sitting on a rally, which happened yesterday. So that way, there's no fun trying to get trapped on the upside and then trying to recover, all day long.
Okay, well, let's also get some more. Before we talk about individual stocks, let's get Mitesh Thakkar also on board. Mitesh, good morning. Sudarshan was telling us about the upside targets that he has. What about you? What would your upside target be on the index? Are we staring at 11,000 anytime soon? And purely for today, what are you looking at?
So I think the view kind of combines today's view and next 2 days view. I think, what Nifty has done while we have been kind of trying to get past 10,850 is making higher highs on the intraday charts and failing for a number of times. Before yesterday, we got that close about 10,850. But if you join all the lines, I think the supply line comes close to about 10,900. So for me, the breakout should happen about 10,900. So still, we are not long the index. And I think once we cross that, maybe today or tomorrow, I think, and once we close above that, I think the target which I would look on the upside would be 11,070, possibly 11,130, which is the highest daily closing which the Nifty has recorded. So at least the retest should happen once we start getting past 10,900. Even a breakout above 11,130 can happen, but that should be the minimum target.
Okay. And all right, what about the goalposts on the Nifty bank? Ashwani, would you have any goalposts over there?
See, my entry point would be probably say 26 680, 700 if we get there. If we don't get there, then there is no trade, and that possibility should always be kept in mind. So you need a decline. Possibly Bank Nifty opens up 100 points, and like Hang Seng, it gives up some gains. So if we get closer to 26,700, that's where you buy. But on the upside, we could easily do 26,850, 900.
Okay, well, let's talk about individual stocks then. Sudarshan, I want to start with your list and also your view on how to approach TCS, because it comes out with its numbers today and it is the stock that has given the biggest returns this year.
For TCS, you be a position trader and buy it for a few days. Don't worry about numbers. Even if it falls today, it's going to rally. There's a very strong uptrend and good tailwinds behind it. I'm mainly buying large caps because that's what the view is. Starting with Kotak Bank, lifetime new highs, outperforming in the private banking sector. Then consider that as a buying opportunity. Dr. Reddy's is now willing to come out of a small consolidation. It's already in an uptrend. That uptrend should continue and persist. Finally, third is Reliance, that big boy Reliance. It had a dip on a day when everyone thought it will go up because of the AGM, and that's the market for you. It surprises you. That dip is done and over with. Reliance should again move to lifetime new highs. And fourth is Oro Pharma. I was pleasantly surprised when you talked about it as a news event also, but Oro Pharma has very attractive charts. That's a buy. Just to balance it, Tata Steel is a short sell. Yesterday it did nothing when the markets were cheerful, but be on the long side.
Okay, incidentally, there is, well, if you can call it news on Reliance as well, Cogensis is reporting that Credit Suisse has initiated coverage on RIL with an outperform rating and a price target of 1,180. So that's some 20% from current levels. Well, Credit Suisse has in the past been able to move markets with its stock calls. So to that extent, you can call it a news event, if you please. But let's get to other stocks from our experts. Ashwani, what are you trading?
See, Pharma looks like it's having a restarting a move after corrections and confirming trend on the upside. So Biocon is a buy with a stop of 630, target of 655. Jubilant Food had a large red bar where we didn't get follow through the following day, so that way that's a buy with a stop of 1395, target of 1440. Hind Unilever is a buy with a stop of 1675, target of 1730. DV's Lab is a buy with a stop of 1080, target of 1135. And RBL Bank is a buy with a stop of 570, target of 605.
Okay, looks like RBL Bank is a favorite today. Mitesh also has it on his list. Mitesh, what else are you looking at?
Yeah, I've been liking the stock for quite some time, and now it's showing continuation. So we have had a trend start at about 548, 550 when was the time when we first recommended this. But now I think it's heading towards 600. So a fresh buy with a stop below 570. I also like Excite, I think, where again similar continuation signals are being observed. That's a buy with a stop just below 265 and look for targets of around 280. Amongst the IT pack, HCL Tech looks like starting a fresh trend. Good set of indicator signals yesterday, so buy with a stop at 949. Look for targets of 985. Voltas had a positive chart on the intraday basis, so that's a buy with a stop at 525 for targets of 551. And since I said 10,900 could be supply zone, I'm keeping one short call. That's on Titan, which has broken the 200-day average. So keep a stop at 834 and look for targets of 795. Okay,
Mitesh, actually I wanted to ask you, when you gave us that Nifty target, you'll buy over 10,900 and look at 11,070. What would be similar markers on the Nifty Bank?
Yeah. So on the Bank Nifty, I think we've been advocating that the Bank Nifty would test the upper end of the range, which was 26,750, 26,800, which it did yesterday. So above 800, I think which should happen today. I am looking at 26,950 is a minor resistance, but eventually I think test of all-time highs of 27,450 I think should happen very soon there as well.
Okay, gentlemen, thanks a lot for that. Let's discuss TCS now. It comes out with its numbers today. It's been the biggest performer this year, up 40%. And remember, this after last quarter's strong performance that TCS delivered. Rima is here to tell us what are the key numbers to expect. And then we have Sandeep Agarwal of Edelweiss also to give us his view. Morning to both of you. Rima, first to you, what are the key numbers expected today?
Well, yes, the expectations are high. As you rightly pointed out, the stock has seen a 40% rally in 2018. Three factors contributing to it. One, Q4 numbers were very strong. The commentary was optimistic. And thirdly, on account of the currency tailwind. So clearly, a big leadership stock with the market capitalization hitting that $100 billion mark in April. Q1 is a seasonally strong quarter for the IT companies. So growth will look better than what we had last year. So dollar revenue growth is seen higher by 1.9% quarter on quarter. On a constant currency basis, growth will be closer to 3.5%, aided by ramp up of deals won in the second half of FY18. The dollar has strengthened against most of the currencies, which is why there will be a cross-currency impact to the tune of 150 to 170 basis points. But on account of the dollar strength, the rupee has also seen an average depreciation of 4% in the April to June quarter. So that will provide a tailwind to the margin. So yes, margins will decline by 100 basis points according to our poll to 24.5%. But if it wasn't for the rupee depreciation, the margin impact on account of the wage hikes and visa costs would have been a lot more. The key to track for will obviously be the BFSI vertical or the banking financial services vertical. All the verticals ex of BFSI are expected to report good growth, perhaps even double-digit growth. The key will be the recovery in BFSI because that will be the key to the company achieving a double-digit constant currency growth for the full year. Some other things that we'll be looking at, the company's comfort on its previously cited margin band of 26 to 28%. And now with the rupee tailwind, will the company look to pass on those benefits to clients? Will it be retained, boosting the company's margins? And in these large deals that they won, is it sustainable going ahead? And ramp up of that will be tracked closely. But I think in terms of, apart from numbers, BFSI will be critical.
Well, I'm not listening to 3 hours of press conference. I want to listen to Rima's rap. All right, we have an expert joining us, Sandeep Agarwal of Edelweiss, to tell us what the street will be happy with. Sandeep, what is that Plimsoll line? What will excite the market and what will say, theek hai, and then actually take profit?
So, Lata, Rima gave a very quick snapshot on everything, but I am extremely bullish and much more bullish than the numbers which Rima is talking about. So, we are expecting 4.1% constant currency growth, and I am expecting just a 50 bips decline in margins. And let me tell you that I am pretty confident that the commentary on BFSI will be much more positive than what Street is expecting. Because, you know, we have been tracking, we have gone to the Bay Area, which is the ground zero of the deals. And we came back extremely positive in last week of March, and we issued a note also in first week of April, which we named most bullish in a decade. And trust me, I believe that IT sector is going through a phase which people have not seen in last 10 years. I am not commenting on a particular quarter numbers because those can be a little bit here and there because of currency headwinds or, you know, some other factors. But in my view, there is a structural upturn or very significant and strong uptick in the demand environment, and all IT companies should do well except one or two. And you will see signs of that in today's TCS number and the commentaries. I can tell you that, you know, the commentary will be extremely robust.
Okay. How much of that is already in the price, Sandeep? We actually spoke to you the last time when you came out with that report about it being the best year for IT in a decade. But the stock has already rallied about 40%. You think most of the good news is already in?
So see, typically the market leader like TCS always rallies ahead of the numbers. So it is very difficult to define how much of that is already in the number. But I think I look at like this, that, you know, there is another second quarter will be even stronger than this. And I don't see any reason why people will be in a rush to sell the stock, although it is extremely expensive on a relative basis. But, you know, the kind of dividend yields which, and including buyback yields which are there in the sector, and particularly in market leader like TCS, and, you know, when there is a sector tailwind and, you know, the kind of investment which TCS has done and the kind of leadership they have, I don't think people will be in a hurry to sell the stock. So there could be still some upside which will be there in the stock, although it is very hard to justify that on a relative valuation basis.
Yeah, actually our technical expert also was saying that. But a final question to you, Sandeep. Did you read Mint newspaper today? They put out that Accenture has actually generated 12.5 to 13.5 earnings growth. Theirs is a September year ending. And that's like handsome. That makes Indian companies kind of look not as good as global peers. Is that something we should take note of at all? Or is it that these guys will catch up the way Accenture has done?
So Lata, I would again, reiterate that on Accenture numbers last week also, we reiterated that most bullish in a decade is coming true now.
Okay.
Because, we have a lag effect primarily because of the composition of the revenues. Accenture has 50% almost of consultancy.
Sure.
And because of that also they they are always a lead indicator, and Indian companies are a lag indicator. So what you are seeing in Accenture, you will see after one quarter in Indian companies also. So I see it as another substantiation of our thesis of most bullish in a decade.
First, some derivative trading strategies as well before we get to more fundamental analysis. Chandan Taparia of Motilal Oswal Securities joins us now. Good morning, Chandan. Good to have you with us. SGX Nifty is telling us that the futures should trade at 10,900.
Yes, very good morning. Nifty index surpasses falling supply trend line by connecting all the recent swing high of 11,171, 10,929, 10,830, 10,816. So after surpassing the same, some buying interest or the positive sentiment could emerge in the market. At the same time, we have also seen this jump in the put-call ratio with decline in the volatility. So that also support the bullish setup and the bullish bias of the market. Index is continuously making higher lows from last 4 trading sessions. So till it holds about 10,770, 10,800 zone, this momentum can extend to us 10,888, 10,929 or even higher levels. Some call unwinding also may push the market to higher zone. So till it holds about 10,800, one can continue to be with trailing stop loss for long side in the market. Now looking at the stock specific, on last trading session we have seen buying interest in many heavyweights counter, and many stocks are emerging as a star performer now. But better to stick with selective heavyweights counter, and buying interest could visible with built up a long position in there only. First is buy on RBL from our side. This stock has been making higher top higher bottom formation. It is all set to hit the new lifetime high territory after a long consolidation breakout. It is forming the higher top higher bottom formation on the weekly chart. We have seen the built up of long position. Volume is also seen a spurt, which indicates that momentum could drive it to head towards 600, 615 kind of level. So on immediate basis, we are recommending to go long with a stop loss of 568 and expecting this stock to head towards 600 kind of level. Second is buy on Asian Paint. We are recommending Asian Paint from last couple of trading sessions as it has given the breakout from its consolidation band and also given a breakout from its ball and flag pattern. We have seen built up of long position in Asian Paint, so expecting it to move towards 1414. So one can buy with a stop loss of 1340 for higher side target. One more trade that is on the Reliance Industry. This stock has been moving in a rising channel and recently taken support at the lower band of the rising channel. Post the AGM, the stock has managed to respect its support of 960 and also respected to its 50-day exponential moving average. We have seen put writing and call unwinding is visible at all immediate strike, which is giving the strength for the fresh up move and the short covering spike in the counter. So one can buy Reliance for 1020 or can trend 1000 call near to 20 rupees by putting a stop loss of 13, and this 1000 call can move to us 34 to 35 levels on the higher side.
Okay, that's a bunch of strategies. Thank you very much indeed for joining us, Chandan. Have a good trading day yourself. Well, with that, let's move to one news that's coming from New Delhi. Actually, the speech was made in Kolkata. It's Interim Finance Minister Piyush Goyal saying that he is mulling long-term bonds to finance long gestation infra projects. We don't have too much by way of detail as to who will issue these bonds. Will it be issued by say one of the IFCIs or any government entity? IIFCL is also there. Will any of those issue the bonds? Will they be RBI bonds? And how will they, what kind of interest rate they'll carry? But nevertheless, the whole idea of a long-term bond to finance long gestation projects. Anant Narayan, market expert and professor at SPJIMR, joins us on the phone line. Anant, in our time, we have seen these in the past, right? All those infra bonds which came from IDPI, they used to be even tax-free. Is this an idea worth trying now?
Morning, Lata. Look, this is an idea always worth trying. The devil is in the details and in the implementation. We've often celebrated the fact that our financial savings have gone up over the last few months and quarters, in fact, ever since demonetization. But one has always wondered that all the fresh money going into equity markets or to debt markets for that matter, is it really translating into fresh investment? And the answer is probably no. It's created a wealth effect. It's allowed some private equity players to encash and move out. But really, when you see the data, the aggregate data, both in terms of gross fixed capital formation as well as in private sector investments, there isn't really much coming through for the last couple of years. Now, one way of, any way of channeling long-term savings into long-term investments is always welcome in a country like ours. But, we've seen a lot of plans being announced, as you said, Lata. Devil really will be in the details and how well this is managed.
Actually, in a utopian world, I mean, this would work really well. But realistically, if you want to sort of execute this long-term bonds, what do you think the government needs to do at this point? I mean, what is feasible now?
Yeah, what interest rate should they give?
Look, frankly, any kind of interest rate which has some tax incentives will draw in savings at a time when stock markets are kind of uncertain. Overall returns for a year or two are not very clear. Plus, we have elections coming up. I think there will be demand for a well-priced long-term paper. Look, as a concept, any way in which we can get the government to start borrowing long-term and channel it into investments is always going to be welcome.
But that'll be that's fiscal deficit, sir. That's a 30-year bond.
That's the point. The last couple of years, both for FY18 and for FY19, the current year, the unfortunate trend that we are seeing is revenue deficit going up and capital spending actually coming down. Even in this year, at a time when you have questions about MSP, about GST collections, about subsidies on oil, the unfortunate victim is going to be capital spending. Now, really a form of fiscal deficit where you borrow long term and invest into infrastructure, education, water table management, etc., is absolutely welcome. The problem really is we've had too much of profligate spending on current expenses and not enough on investments. So, yeah, you're absolutely right. This should be managed within the fisc. Having said that, if you do have something like an IFCL or an infrastructure investment authority, which is channeling these funds into long term, I think it's absolutely welcome. Again, devil in the details and implementation.
Sure. Okay, everyone's talking. Before we let you go, Anand, everyone's talking about 70 on the rupee very soon because of the way the current account deficit and crude is moving. You belong to that camp?
I think eventually it will happen, Sonia. But at the moment, looks like we will see some respite. There's been some very, very strong, defense of the rupee by the RBI. I reckon they've already sold more than $25 billion since April. Plus, whether we notice it or not, there is an interest rate defense of the rupee underway. Dollar rupee forwards are very high. 10-year bonds are close to 8%. It's not cheap to buy dollars in the forward market today. So there is a defense underway. Having said that, we do have a problem in terms of our CAD expanding quite a bit. And we are sort of struggling to make the primary deficit come down. So therefore, over a period of time, I think 70 will be seen. In this year, however, I think the government will be very, very keen not to see headlines on the rupee. And therefore, the defense of the rupee, both from the RBI and on interest rates, might probably continue.
Okay, we will discuss that on another day, Anant, because today I don't need to be a technical expert or a fundamental expert to tell you the rupee is open strong, will open strong. I mean, look at the strength in the yuan. Where were we seeing it? Towards 6.7 2 days back. Today opening at 6.60. And of course, the dollar index is still very modest at 94. We have seen 95 in the past. So today, the dollar is going to cost less than 77 or wherever it closed yesterday. A good 10 pies lower. It should not be ruled out, given the way the yuan has moved. Thank you very much, Anand, for joining us. We will flesh out the infrastructure bonds idea if and when it is mooted. But there is another important news that I just want to put on the table. It may be a puspataka and not be a news at all. The Allahabad High Court had on June 1st given relief to the Independent Power Producers Association, allowing that the application of the Reserve Bank's February 12th circular be stayed till the Finance Ministry meets RBI and tries to sort out the problems of the power producers. Now, that case comes up for hearing today. The possible scenarios from the hearing include: one, the Finance Ministry simply says that we need more time to sort out the problem, and that problem is given. It may even claim that the problems are sorted out post the announcement of that AMCARC by the Sunil Mehta panel. But in an unlikely extreme scenario, there is a chance that the Allahabad High Court may stay the application of the circular indefinitely, saying that it is stayed till it sees a concrete plan for power producers. I am not at all saying it's a likely scenario, but it's a very important case that we need to monitor.
Okay, well, these are the macros, but let's drill it down to the micros because yesterday there were plenty of stocks that hit all-time highs and the market was roaring. Let's find out what brokerages are saying this morning. Anisha joins in to give us more. Hi, Anisha.
Hi, Sonia. Good morning. Well, yes, first up, Credit Suisse has actually initiated coverage on Reliance Industries. Now, they have an outperform rating with a target price of 1180, giving you an upside of around 200 rupees on the stock. Now, they say that they see good opportunity for the company's retail business. Also, they believe that Jio could actually be a significant value creator for the shareholders, and also they believe that the petcoke gasification is something that can aid the refining business going forward. So something to keep an eye out on, because remember, on the flip side, Jefferies has actually written on Reliance and they actually have an underperform rating on the stock with a target of around 790. They say that the refining headwinds may offset another smart petchem performance. So interesting to see how that one reacts and which one of the brokerages actually stand true on that. But Citi has also written on the telecom space. Now remember, Idea is in focus because the Vodafone merger actually got approved, and that is what we picked up from sources. Now they say that this is actually something that they have a buy on all because the synergies can lead to significant gains as per them. They, however, say that the incumbents Q1 top line may see a decline for 8th straight quarter, as well as they might see pressure on the margins, but nonetheless they maintain Bharti Infratel as their top pick in the telecom space. Moving on to HCL Tech, that one is in focus because of course of the buyback that the board is considering on July 12th. Now Morgan Stanley believes that the buyback should be in line with its policy to return 50% of the income. They have an overweight call with a target price of 1,060. Dish TV came out with numbers today and most of the brokerages have taken in positively. CLSA, for example, says that they find the ARPU number as a surprise, and this was led by the price hike of the company. They are forecasting a 10% EBITDA CAGR growth with a buy call on the stock and a target of 100. Kotak has also written they have actually raised the target price on Dish TV. It now stands at 90 rupees versus 84 earlier, and they say that they are seeing early signs of turnaround in companies earning fine print. That is something we saw in this quarter as well. Let's see what the future holds for that one. Back to you.